Hey everybody, what's up? We are back with part two of me going over my entire trading strategy. Again, the performance speaks for itself. It's very simple. Anybody can do this strategy, very easy to understand and set up. There are very basic principles that there's a ton of information on. And so the part two is going to be on the fundamental side of this. So if you haven't seen part one, that is the technical side of my trading strategy. Two parts. I keep both as simple as I possibly can in order to maximize success, because with my whole trading theory is that simplicity is successful, and my own personal results have spoken for themselves. If you're interested, make sure to subscribe. I make videos like this as often as I can, and I go over my own personal portfolio as often as I can. But again, just got off of work, so we are going to be zooming through this as much as we can. So make sure to subscribe, and let's get into the fundamentals. All right, so getting into the fundamentals, we're going to keep this as simple and quick as possible because I have to go in a couple minutes, so let's get right into it. So Lululemon, looking at their financials, this is on TradingView. Again, completely free, very simple to use. I will say TradingView does make it kind of hard to find the financials. But if you just go into the stock, which we're on Lululemon right here, reiterating, first of all, what we are looking for is downtrending stocks with strong fundamentals. That is the very basic essence of what is going on that I do. But anyway, if you want to find the fundamentals on TradingView, you click on this little button in the top right. On the phone app, it's very, very easy to find, but they make it a little difficult on the computer. And you just click on more financials right here, and we'll get into it. So annual growth, very simple. Once again, that's the whole key to this, is keeping it as simple as we can. Look at the growth here. So over the past 5 years, Lululemon stock is actually down about 10 to 15%. So 5-year growth, you would think, would probably not be good. But total revenue, 4.4 billion, net income of under 600 million right here. 4 years later, not even in the past, let's see how many quarters we have. Not even in the past quarter of 2025 included, we have a total revenue of 10.6 billion and a net income of over 1.8 billion. So total revenue more than doubled, net income more than tripled in the time where the stock is down. Now, if you don't see the issue with that, then that's your own problem. But anyway, there is an issue with that, and that's that it should be up near this higher value that the stock tends to see in the past. Now, the reason that it is down is because of a lot of things. They're having a lot of margin pressure. There's competition from companies like Nike and Adidas that are making it difficult to grow, but they are being competitive. They're performing well, and I think the market has them undervalued at the moment. So again, keeping this as simple as possible, I look at those trends. I see the financials are trending in a strong upwards way. If we look into just a little bit more, you can see their PE ratio, price to earnings, and even price to cash flow, which I don't use as often, has also been trending down. Now, it's a little high at 27 for the PE, which isn't always the best. But when you look at other examples in the industry, that's not that bad, especially for a very high growth company like Lululemon. So it's just important to see the long-term trends. They're increasing their earnings per share every single year. Pretty good. And that's honestly it. Another good company to look into is Snapchat, that I have a pretty good bit of money in at the moment, where their revenue over the past couple of years has been steadily increasing. Their net income is not that great, but if we look at their earnings and their projections here, you could see they are projected to increase it in the next couple of years. Now, does that mean it's going to be very soon? Probably not, but ideally they outperform. They just announced new products. It's important to look at things like that as well. But realistically, the company is doing fairly well. They're not profitable at the moment, so we don't have the perfect earnings or PE ratios available to look into it. But what we're seeing is steady, consistent growth, and that's what we want to see. And with that steady, consistent growth, we look at their stock price, and it has plummeted over the past couple of years. In my mind, that is a great buying opportunity. Fundamental growth, technical buying area, that's what we want to see. So anyway, thanks for watching. That's the fundamental side. It's that simple. That's all I do. Results speak for themselves. And see you next time.